702.
You're listening to the best of The Money Show.
The Money Show.
Welcome to the best bits of The Money Show, a digest of some of the most important insights, thoughts, and sometimes the best jokes from the show this week. If you'd like to hear more, please go to our website or go to your podcast app and search for The Money Show. So often you might hear something that tickles you, might well tickle someone else you know. Please do send it to them, forward it along, and let them share the joy as well. To start, some of the news stories that we thought were important from the week that was. The Group AfriForum getting a court order that stops this out-of-court settlement between the National Energy Regulator, NERSA, and Eskom. Now that all has to go to a judge. The settlement would have allowed Eskom to increase its electricity tariffs by another 54 billion rand over 3 years to correct an error. The error was made by NERSA. It was going to be compounded by the fact that NERSA had made a previous error. Add the two errors together, and it actually came to a significant sum of money. The Minister in the Department of Trade, Industry and Competition, Park Stow, saying his department and the National Consumer Commission will look to see what's happening in the e-commerce space. This seemed to me to be all about Temu. And the South African Reserve Bank seizing several cars that belonged to the estate of the former Steinhoff boss Marcus Jooste. He took his own life after law enforcement were about to pounce on him for the fraud he orchestrated at the company that bled billions from investors. Tonight we bring you a mixture of stories from the world of money from the week that has been. This week's edition of How I Make My Money, we spoke to Michelle Mokone, the co-founder of Mo's Crib. She and her sister transformed a humble origami swan into a globally recognized home decor brand. The journey is proudly South African. It's all about sustainability and creativity.
The base of my academic career started in agriculture. So I did agriculture economics at the University of Pretoria, and then I did my honors there. And then I went on to do my master's in international trade law and economics. So I always thought that's where my career is going to take me, working at the WTO, and then only for it to take a different trajectory, which I'm not too mad about.
So how did that happen? Okay, how did the origami swan suddenly become so important?
That's a very interesting question because I remember my sister was living in London. So when she completed her matric, she went straight to London to live there. And she was living with a Japanese roommate who was making origami, of course. It's a Japanese art form of folding paper. And so she picked up that skill. And, she's always been very, skillful when she was young.
She's sitting next to you, so just be careful what you say.
So she was actually making like rugs from plastic. And so it was very easy for her to pick up that skill. And she came back to South Africa and she was trying to find a market to sell these origami swans. But I think the market was not really quite understanding the swans. And I think like she had been doing it for 10 years at the time. I invited her to go to a market with me called Newsmakers now. And at the time when we went to the market, we were just going to support a friend of mine who was exhibiting at that particular market. And, we just went there just for a casual Sunday to just have fun. And when we got there, she saw somebody actually selling roses made from newspaper. And she thought, well, I mean, it's roses, it's not functional. Clearly my origami swans could actually, be better because of the origami swan is actually functional. So it's a whole sculpture. You can actually use it to put, stuff in it. And fast forward to that evening, she wrote to the, owners of the market and tell them about her swan. And a year later, we're there. And Stephen, it's such a funny story because when we were driving there, we did not even know the price of the swan. Okay, so we were like 5 minutes from the venue. It's like, actually, how much are we selling this for? And we're like, okay, 250. We're like, okay, that sounds good. And we completely underpriced it. So, I guess the price also helped us, but also it was a very good product. It was environmentally friendly. It was very different to the eye. It's something that South Africans have never seen before. I mean, you may be familiar with origami, but not the swan sculpture. And so what we thought was just going to be, a market just selling for fun, because at the time we were working full time. So I was an agricultural economist working at Grain SA. Mo was working at Nestle in the HR space. And so we were just doing this for fun. And it became a phenomenon. I was shocked. I was like, these papers, we pass them, we sweep them at home. And here it is, people are really valuing this. And I don't think it was just the price that made it, such a phenomenon. But I think, just the way that we sold it, the way that it was just so different. And because it was just like, I think a lot of what people were saying at that time, I mean, this was 2016. Environmentally friendly was the word, And then we stuck onto that. We're like, okay, this is where the market is going. And if we are going to introduce another product, it certainly has to have these particular characteristics, especially because of, I think that we are also very entrepreneurial. So yes, we had our full-time jobs, but I think deep down inside, we knew we wanted to have our own businesses. And it was because we grew up in a home that our dad was an entrepreneur. Even though our mom was a nurse, she was also, doing her side hustles on the side. And so we knew that wherever the road takes us, we would really like to see ourselves as entrepreneurs. And we didn't really see a big window or opportunity there. We thought, okay, this is fun. And then, we
So
to something.
sometimes, a company in that position will have one product that really sells. It's like, sometimes people have a novel. Writing the second one is hard.
Yes.
Hardest thing.
Yes.
So what was your second product? And I presume it couldn't just be an origami duck. It had to be something else.
It had to be something else. And we landed on a PVC basket. And why PVC? People always ask us. PVC is one of the least recycled plastics in the world. When you go to PVC manufacturers, any PVC manufacturers, and you go to see their backyard, they've got piles of PVC that are gathering dust and have been there for years.
And they'll gather dust for another 1,000 years.
Exactly. Well, thank God Moscrip is here because we get to clear all of that up. And so we noticed that, this is definitely what we can also introduce. First of all, it's environmentally friendly. It's recycled. It's functional. It's steady. It just really just ticks the boxes, just like how the origami swan did. And at the time, it was just a laundry basket that we introduced. And we came across this with actually artisans making it on the side of the road. And we found a way to actually make it better and enhance it. And those artisans are still working with us today. And we've managed to not just do the laundry basket, but also the planter version. Right now, looking into doing outdoor furniture. So the introduction of that came a year later. Of us being at the market, and we sold both the origami swan and the PVC laundry basket, which sold super well, and I think it was very easy for us to sell it. We collect the PVC pipes from construction sites, landfills, the PVC manufacturers. It's steady, it's water resistant, indoor, outdoor friendly. And, we don't dye it. So, what you see is what you get. Even the PVC laundry basket, you can actually see some of the markings on that actually laundry basket. So it really just makes it very beautiful. And so, yes, it was a second chapter, but I must tell you, it was actually quite easy for us to sell it. We were very scared, wondering if it was going to be received the same way. But once again, this was something different. And I think this is the hallmark for Moscrip because we really bring things that are very different, things that are very eclectic. So, yeah.
So you have a couple of products, and now you need to actually have more, and then you have to sort of find things that you can make. So it's a scaling up moment of a small business. Now you're going from, a sort of sister company to something bigger. That must have been quite difficult. And at the same time, there's a bit of a rush. It's very exciting, but there must have been quite a lot of pressure.
It was a lot of pressure, especially because the second time when we then had to then do the business full time, we then had to come up with new products. And this time, we're not just doing it for fun. We did not have our full-time jobs. We left the comfortable jobs.
Yeah.
Whatever we introduced had to work, okay, because we needed this to survive personally and to also grow the business. And we had very big vision for the business. Now, the beautiful thing about our journey is that things just fell into place, especially in the beginning. Because whenever we reached out to the retailers like, we trade with Woolworths, Mr. Price Home, At Home. And so at the time we reached out to Woolworths and they said, we love the PVC. We've got very small section at Homes, but we think we want to have the grass. And that is how we then, went on to do grass. And it didn't just stop because the base grass that we were using was Ilala palm leaves. And we didn't just stop there. We then traveled across Africa to find different types of grass, making sure that whatever products that we bring at Moscrip are environmentally non-invasive. And so we had to just find different types of grass. We worked with sisal, elephant grass, different types of grass, and banana, like a whole bark of a banana tree. We actually use that to make, baskets. And so following that, we then were able to introduce new products just from one customer really just having a concept to say, well, I would like grass. And we thought, okay, we're not just going to stop at the PVC. Let's do grass. It can be a complementary product in our whole assortment.
When you were at that phase, and so you've got some money. Obviously, you'd both been working, but then you would, I presume, have some money that you'd got out of the company through sales. Did you have to borrow money to take it to the next step? Because I always think that must be the scariest thing. In Cyril's economy, to actually sort of borrow money and not be sure if you're going to be able to pay it back.
Stephen, I think it's even more scary when you don't think you needed the money, Mo and I did not think we needed money to grow the business. We knew nothing about investment. We knew nothing about venture, or equity investment. We knew nothing. Like literally, we thought that the money that we had was going to be enough to take us to the next level. I remember when we came home, we took our last money to, and by saying come home, because we lived in Switzerland for a while, and then we moved back home to pursue the business full time. And we took a lot of, I think about 50% of the money to go to do a trade show in New York called New York Now, hoping we're going to get a whole lot of wholesale orders from your IKEA, etc. And we left with 0 orders. And that was quite devastating. But what we took with us was an award that we won. We actually won the best product of the market. And here we were competing with basket makers from Asia. I mean, that's a very big market. And so that was like our ticket way to come back to South Africa and say, well, you want to have this basket in your stores. And I think that's what really helped us in a way. But we really struggled a lot, having to, go from having a very comfortable job to now having to sustain your personal life and also grow the business, and nothing about investment and funding. And while we were at that particular trade show, that we actually found other makers who were actually helped by government to actually come and exhibit. We did not even know that program existed. And so that just goes to show how much we just knew, how little we knew. And so we survived on friends for a very long time until the business got to, got to grow way faster than the cash flow, to a point where we really just had to start Googling and searching, and we ended up finding, learning a bit more about funding. And so for a very long time, we were very, very self-funded. I mean, I think from the time that we started the business, I think for 3 years we were self-funded, and only later on we ended up being able to get, equity investment. And that really helped us a lot, in our business. But yeah, I think friends and family really helped us a lot, in the beginning stages, even as customers.
So I often think, one of the things about running a business is people always say you never sleep at night if it's your own business, because you've got other people to look after, and you never, it's not like, I get a salary for doing this kind of thing. Do you sleep at night, or does it still keep you awake? It's quite a difficult question to answer in a way.
We do now. You learn a lot, I always say that we're not building the business, the business is building us. Yeah. Because when we went into business, what made sense for us is that, you are grinding all the time. I remember, Mo and I were the drivers. She was definitely the pickup truck driver. She was the driver. She would collect all these pipes and, work with the artisans and go and collect, looking for galvanized wire in landfills. It was actually, it was crazy. And this is while we are actually doing big productions for our retailers that we work with. And we wore many hats in the business. And it got to a point where we really understood that we had to have our weekends. We had to have rest in order for us to be able to continue with the business. And we spoke and we said, to what end? You're going to work so hard and push yourself to what end?
You need a life.
We need a life, and more than needing a life, you need to also protect your health. You want to make sure that your business is able to actually have you around for as long as possible. And so it became important for us to be able to rest, but also to be able to employ people. So now you had support staff that's able to come into the business and do the other important bits. And I think also understanding that this is definitely not my strength. So for a long time we were having to look at the finances ourselves. We both do not like finance at all. And so it's one of the things that we decided, no, we can definitely have someone, we can delegate this particular thing. And so because we've learned to delegate, and I think another thing that even if you've delegated, you can have sleepless nights because you don't have salaries. There are some months where you really have to really scramble for salaries. You are even lost. You don't even think about your salary. You think about your team members, and you cannot compromise when it comes to them. And we've learned that even in those moments, you need your sleep, because a solution will come. When you are in business, you are put in business to be able to solve problems, and you need to trust that more than anything. And so you have to get to a point where you don't panic anymore. You cannot run a business on panic. You have to know that you are a problem solver, and you move like that.
Michelle, you supply now to people outside the country. And you talk about going and winning an award at this trade show, but not actually selling anything.
Yes.
How did you go from that position to actually having, being able to actually have customers outside the country? Because that's what everybody wants, is the Holy Grail, is that.
Absolutely. And I think from my stories, I mentioned that when we went into the business full time, one of the first things that we did was went to the trade show internationally. And I think it was very clear from the beginning that we wanted to build an international company and not just one that trades locally. And so, we took advantage of the COVID period. It was a quiet time. People were working from home, and I think it was just less stressful for the people.
Yeah.
And that's when we started emailing all the retailers. We emailed many, many retailers internationally. And the first one that responded was Crate and Barrel, who's still an active customer. In fact, all our customers that we started with in the beginning are still active customers today. And they responded, positively. And a year later, we started supplying them. That was in 2021. We did our first export, project, and that was quite exciting. We sent our first 2 containers, and later on, managed to send many more. And a year later, we then started trading with Target, one of the largest retailers in the world.
Target's huge. When I read that, I was amazed. Yeah.
Yes, Target is very, very big, and we still work with them today.
Was it difficult to kind of match what they wanted in terms of just scale? They must have wanted a lot more than you'd ever, in terms of volume, than you'd ever supplied before.
Yes, we currently don't even meet the volume that they're looking for. They're looking for 8,000 SKUs per month. That's just 8,000 of one item. So if you've got
What's a SKU?
A SKU would be like a product. So for instance, if you've got medium, small, large, that's 3 SKUs because you've got a smaller, medium, and a large. And so we're still not at that level yet, but we were able to supply the volumes that we can. And we didn't just stop there. Now we're working with CB2. We started trading with them this year, and we've got our site on Lowe's, which is another international retailer. So yeah, we've managed to actually grow from not winning, from not being able to sell any at the trade show to now working with all of these retailers.
Michelle Mokone's story there about how she and her sister didn't just build a successful business, they've also been championing sustainability. They've managed to export South African creativity onto the global stage.
The best of the Money Show
on 702.
702.
In this week's book discussion, we spoke to Bob Stark, the co-author of The Life Cycle of a CEO, about some of the defining stages that really shape a CEO and some of the most important and difficult moments that they have, and particularly from getting the job, from dealing with a crisis, and then planning succession.
I think, part of what our research shows is that it's less about personality or other particular qualities and skills, and it's more about the ability to evolve with the role. And that's really the focus of our book, is to help people understand, help CEOs in particular and those that support them understand that the job is about evolving in the job. And we talk about the different stages that CEOs go through and how it's necessary to be a different leader and evolve with the job over time.
So, in a way, that's about the ability to grow. I often think as I go through life, the greatest challenge, and I see people around me of my generation and older, is some people can change as the demands change, and some people find that quite difficult.
Absolutely, that's right. It's all about recognizing the circumstances that you're in and adapting to those, and that is really the number one job of a CEO.
Is there a particular moment or phase in a CEO's sort of journey or time in the job that is the toughest? I'm sure that most CEOs are probably the most nervous in 2 cases. One is when they kind of know they're in trouble and the board is meeting. And the first, though, is probably the first or second or third day on the job.
That's right. So it's an interesting question you ask, because I think that the way CEOs experience the job is that first day, the first month are really disorienting. And you've probably heard many CEOs talk about the loneliness, the pressure they feel, this weight of responsibility that they feel, that they just, no matter how many people tell them before they get the job, they can't fully appreciate it until they feel it themselves. I think what's interesting, though, is that, and I agree with you that when a CEO is in trouble, that can be a very uncomfortable place to be in. I think that what is interesting, though, that getting back to your question, is that if we could look at it another way, and that is, there are times in a CEO's tenure when they're not aware that they're not performing in the way that they should, because the markets might be rewarding them for their performance, and the board may not actually see what's going on, and maybe missing the opportunities to make those kinds of transformative changes that we talked about earlier, making those adaptations that are required.
It's often about what you miss, what you didn't know. I hate to use this phrase, but it's so important. What you didn't know, you didn't know.
Yes.
When you get into that top job, is there a particular sort of mind shift or a particular change in outlook that you need to make? I mean, is there a particular kind of way? I mean, someone was describing to me today, they used a wonderful phrase a few weeks ago in a conversation that in some jobs you need to have a balcony view rather than a kind of, down with everybody else view.
Yes, well, I use that metaphor myself frequently, is that CEOs need to be careful not to spend too much time on the dance floor. And they need to get up in the balcony. So absolutely, I love that expression. Yeah, I think so there are many things that are unique to the CEO job. One of them is that, and a way to think about this is what are the things that only the CEO can do, and only the CEO can really think long, see the big picture. And another thing about the CEO, in particular in public companies, is that the CEO. We sometimes talk about the hourglass concept. The CEO controls the flow of information from inside the company to outside into the board, and from outside back into the company. So they're the pinch point in the hourglass in terms of information flow. And just a third thing that's really unique about the CEO job is the breadth of the job. And so most CEOs, when they're new to the job, feel this capacity challenge. That is, they've got a job that's broader than ever before, plus they have a bunch of stakeholders they didn't have to deal with before. All of that is new, and the demands on their time are enormous, which ties right back to being on the dance floor instead of being on the balcony. So you have to manage your time ruthlessly so you can get up there.
A lot of being a CEO is about technical skill. I mean, there's a reason why historically in South Africa we use the phrase a chartered accountant, but so many of the people who become CEOs have a particular set of qualifications. That's why people study those qualifications when they come out of school, is they want to be a CEO. But there are so many other things that make up a good CEO. A big part of it is emotional intelligence and resilience. To come back from defeat, to put a brave face on defeat sometimes is very important. Sometimes it's about knowing actually how to get the most out of a leadership team, which requires maybe a completely different set of skills and may almost be required more than it was, say, 20 years ago, might be more important.
Yeah, I agree with that. So we sometimes think about, to have a simplifying frame for this, we sometimes think about experience. And so these are the things that are the easiest to measure because you can look at what a person has actually done. Capability, and I think that's what you're getting at with leadership skills, being able to engage hearts and minds to engender followership. But there are many more on that list, leadership skills. And then we talk about capacity as a third category. And that's where we would put innate abilities like emotional intelligence and the ability to remain objective about and seek disconfirming information to try to make sure that you're actually truly understanding situations and not letting your biases overrun you. And then finally, just elements of character. And we see this all the time all around the world when leaders don't have it and the cost that has.
I mean, and yet, of course, there are examples that go against this. I mean, I've never met Elon Musk, but I wouldn't suggest that he has a very high emotional intelligence.
Yeah, that's probably right. I think that those cases, it's really interesting, that those cases of the sort of hardcore CEO and the founder mindset, I think it's called, I'm blanking on the name that an author recently wrote about, but this mindset of the founder that is always on, hard charging, pushes and forces the team, leads with fear. I think that only applies in very limited situations, and we see very little of that in more mature companies than public companies.
That was Bob Stark looking into the evolving journey of a CEO.
702. You are listening to The Money Show's best bits.
Investment School this week, Gary Booysen, Portfolio Manager Director at Rand Swiss. The moment that we haven't seen very often before, where you have record high stock valuations, most of them in AI stocks. At the same time, you have soaring gold prices. Gold, normally a safe haven. The discussion looking at what seem to be contradictory trends, and also telling us what they say about current market sentiment.
I think one of the big themes that we've seen this year is just a total destruction in the value of the dollar. And since we're measuring both of them in dollars, they both look pretty amazing. But it's actually, you got to take a step back and go, wait a minute, this is just a dollar that's fallen apart. So gold price looks fantastic. I mean, I say that, but I mean, sort of tongue in cheek, because if we look at the Rand gold price as well, I mean, the returns have been spectacular, and the Rand, has appreciated quite significantly against the dollar. But I think I saw a client put a trade through today on a Kruger Rand at 78,000 Rand for a full coin, which is pretty staggering when you could have had them at about 43,000, 6-7 months ago. So the rally has been in Rand terms as well. I mean, the question, can they both rally? Absolutely. The idea that gold is just the fear trade. I mean, that's exactly what, everyone gets taught, kind of investments 101. It's a great hedge. It's a hedge against inflation. It's a diversified asset class that's non-correlated. So, when stocks go down, it can go up, and that's right to an extent. But there's something called the love trade and the fear trade. So the fear trade is that traditional hedge, but the love trade really comes from more of, the fear trade is kind of dominated by the West, but in the East, it's the love trade, which is, as you see rising incomes in the likes of India, for example, you actually see more demand coming through for gold as well. And it's actually, as you see this rising wealth, there's suddenly greater demand, and it's got nothing to do with fear or anything like that. So there are more elements, I suppose, to the gold run that we've seen at the moment. A lot of people also point to all the central bank buying, as we see like de-dollarization, across central banks trying to diversify their balance sheets. And that's been true for a while, certainly for not necessarily accelerating at the moment, but continuing. And and I think a lot of it also, it becomes a self-fulfilling prophecy when you can't really value something. Gold is, I love what Simon Brown calls it, it's your shiny pet rock. It doesn't produce a dividend. It doesn't, pay you a coupon. It's just a shiny piece of metal that people end up putting in their safe, maybe use for a bit of jewelry, very little industrial application, but has the tenets of money, which is interesting, but...
Could the same dynamic be driving both things? So with AI, you have a fear of missing out, and gold's valuation is now at a point where you have a fear of missing out because the rally has been so strong. You just think, well, the value is going to be higher tomorrow, so I am going to buy it today.
And I think you see that in investment markets quite often. And that's how bubbles are built as well. When you suddenly, all the stories are, I bought this and it went up and you're missing out. Of course, it becomes...
Cryptocurrencies 101.
It's human psychology, and it does happen. And, it's, I think from an institutional point of view, I remember talking about gold. It was probably $1,300, $1,400 an ounce, and I think it was a question on a show somewhere. And I said, well, it looks kind of attractive, gave the positives of gold. And everyone kind of like almost spat on me. Like, what are you talking about? This is not a real investment asset. You're kind of one of the tinfoil hat people. And now this is something that you engaging at a hedge fund conference. And they're saying this is an absolutely essential asset that you should have in your portfolios, and making all the positive case for gold. So even in the institutional space, it does become a self-fulfilling prophecy. And certainly from retail investors, which we engage with a lot. Gold goes up, they see the return, now they want in. And you almost got to kind of remind them that sometimes a contrarian approach is not the worst thing. The idea to make money is buy low, sell high.
Yes. Your questions tonight for Gary Booysen, the director at Rand Swiss Investment School this evening. 011 883 0702 021 446 0567. And of course, your voice notes, if you prefer that, on 072 702 1702. And of course, this is really all about the sort of idea of what is going to happen next or not. Gary, obviously we need to use the word diversification here, because I'm sure what people are doing is splitting some of their investments because both are going so high. That's actually a very rational thing to do until one of them stumbles.
Yeah, so diversification, they always say, diversification is one of those principles that gets taught also at all business schools. So it's appropriate for this show, the investment school, that we talk about diversification, of course. But remember, diversification, is a way, it's almost a free way of protecting money. And that's wonderful. But they also say, you diversify to protect, you concentrate to create. Famous hedge fund manager, his name escapes me now, he says, he likes to put all his eggs in one basket and then just watch that basket very, very closely. So, and that is a way that you can generate huge amount of return. But as you say, from probably a listener's perspective, where you're looking at your overall portfolio. Diversification is generally a free lunch. It's generally something that is good. We kind of normally explain it to clients. You've got your kind of bread and butter money, and you've got your yacht money. You want to have a portion of your portfolio that is well diversified, that is protected from volatility, because it's the money that's going to get you through. It's your retirement funds, etc. But for the money that's your yacht money, that you're looking to really shoot the lights out, there's nothing wrong with concentrating, and I think that's important to understand as well. But at this stage, I mean, like you say, is AI in a bubble? Is gold in a bubble? It's very difficult to tell. I mean, we can give kind of like, what do they say? In the market, you have great valuation tools and terrible timing tools, and generally, markets can remain irrational longer than you can remain solvent as well.
Yes.
So I probably wouldn't be betting against the AI rally at this stage. Generally, when every news headline is saying it's a bubble, buy protection, that's the market climbing the wall of worry. That's kind of not when markets crash. It's when everyone is telling you this is a no-brainer, then you've got to start worrying about it. So maybe a little bit to go, but very difficult to tell.
An interesting comment you made about wall of worry, because my next question was going to be, can we talk ourselves into a crash? But you suggest actually a crash comes much more unexpectedly. Certainly the previous ones have.
Yeah, and I think that's it. When there's a lot of skepticism, generally that is when people have money on the sidelines and there's still more capital to deploy. And typically bull markets do climb a wall of worry. Like I remember, kind of recovering out of 2008, and every discussion was about, will it be a V-shaped recovery? And everyone's, no, it's going to be a W-shaped recovery. And you just don't believe the first tick up, and it's going to turn down again. And then, and by the time it's at record highs, then it's an obvious thing. It is just market sentiment. It's market psychology, at least. So, is there more to run? It's like I said, if I could predict that, I wouldn't be on radio and I wouldn't be working anymore. But yeah, from our perspective, I mean, you look at the US earnings season that's coming out now. You look at we're going to get a lot of the AI results, but the expectations are for significant revenue growth. We're going to see earnings starting to come through. And that does feel a little bit different from the dot-com period, where you were buying websites with a .com domain that had no revenue, no earnings, just an idea, and you were paying billions for them. This does seem a little bit different, just in the context of certainly some of the bigger stocks, the likes of the Amazons or the Microsofts or the Nvidias, for that matter. Nvidias are essentially selling the picks and shovels, but people are buying in like the GPUs. Whether they're building infrastructure that will never be used or not, that remains to be seen. But at this stage, the money is real.
So the whole point really then is that money is going through these things, and that means that the valuations are actually correlated to reality.
Well, at the end of the day, a stock's valuation is 100% correlated to its earnings in the long term. And as you said at the beginning of the show, you're buying up, you're paying up for these earnings at this stage, expecting those earnings to materialize. Now, whether or not we're in a bubble depends on whether or not those earnings materialize. That's what it's going to come down to. So, yeah, at the moment, the earnings. I mean, if you look at, let's say, the revenue line on Nvidia, it's staggering. I mean, if you took that off and didn't, you just gave me the income statement, wouldn't tell me what the product was, you'd say this is a fantastic company.
Yeah.
You can understand why investors are buying into it. It doesn't have to be the story around the company, and I think that's maybe kind of the point I'll make. It's different. It's why it feels a little bit different from the .com at this stage of the cycle, is because you can see the numbers coming through. Like that's the big difference. But of course, there's a wonderful chart. It's called the Gartner hype cycle. It's the technological trigger where something new happens and then it kind of goes up, and eventually you end up in the trough of disillusionment. And I think that will come. There's no question. But when will it come? I mean, that will come when we establish whether or not the productivity advances from AI do materialize or not.
In a way, social media may be heading into that trough right now. Platinum, and we do need to talk about that. The comeback has been very strong. I went to go and look it up today. Platinum's highest ever level was around $2,290. It's now $1,711. And on the face of it, that would mean it would have much further to go than gold does right now, which is already long past previous records.
Yeah, so platinum's interesting because platinum is very different to gold in terms of
it's got a use.
Its application. So, and also I suppose the supply dynamics of platinum as well. But if I look at kind of the demand dynamics, around just under half of all platinum is used in autocatalytic converters. It's automotive industrial applications. If you look at the investment demand, so total platinum demand for 2025 is expected to be around 7,000, at least 7.6 million ounces. Of that, only 320,000 ounces are investment demand. So there's a huge scope for platinum to act as an investment vehicle. And I was listening to the CEO of Volterra speaking, and he's already saying that they are starting to see the excitement around platinum because it fulfills a lot of the functions of gold in terms of it's durable, it's valuable for a small size. I don't know how malleable platinum is compared to gold. I think that's the other one that they've got to look at. But there certainly is investment demand for platinum picking up. I mean, specifically, it comes historically out of Japan. So the demand side of the equation is very different in terms of platinum, and that can drive obviously platinum high if we see a big pickup in investments. Of course, if we move quickly away from the internal combustion engines towards fully battery-powered electric vehicles, I mean, it's going to disrupt the industrial side of the market dramatically. But I think it's also the supply side of the equation that's crucial, that South Africa is absolutely key in global platinum markets. And, we're running a deficit for the third year in a row. So, that 7.6 million ounces that are being demanded, it's only expected that we're going to supply 6.9 million ounces this year. And of that, South Africa is going to supply, call it 3.9 million of those ounces. So it's a significant player in the market, and a lot of it is also recycling as well, because one of the things that I suppose people maybe don't appreciate is, with an autocatalytic converter, platinum is 100% recoverable from that. So when you scrap a car, you don't lose that platinum. You can recycle it and put it straight back into the next car as well. So a lot of it is recycled platinum, but it's an interesting position. Can platinum go higher? The market's been in deficit for a long time. I remember pulling my hair out going, but this market's in deficit. We should have higher platinum prices. But the market doesn't move. But it seems to have woken up. And certainly the JSE listed stocks are not complaining, because if you weren't in gold and platinum miners this year, you've really suffered. But if you have been, it's been a wonderful, wonderful ride.
Gary Booysen there, the Portfolio Manager Director at Rand Swiss, providing a valuable perspective on the unusual market dynamics at play.
702. The best of the money show from this week.
Our shapeshifter this week, Ndia Magadagela, the CEO and co-founder of Everlectric. It's a company that is leading the shift towards cleaner transport. It has an electric vehicle as a service model. Magadagela is a chartered accountant. She was involved in deal making. She shared how she's helping businesses replace diesel fleets with electric ones that are more cost-effective and very environmentally friendly.
So Stephen is our client. He's got 10 vehicles. We will put down charging infrastructure at his premises. The vehicles will literally sleep at his premises. He will charge there. And we will just make sure that in the back end, we connect it to the chargers. We ensure that overnight those vehicles are charging. If they're not charging, we will either start the charging remotely, or we will call someone and say, vehicle number 6 has not been connected to the charger. So that is our headache to take care of, and not the clients.
Okay, so vehicle number 6, a particularly naughty vehicle, doesn't like to go to sleep at night. Do you know where it is at all times? I mean, do you have that kind of control over it?
On my phone right now, I know where all the vehicles are. Hopefully they're all where they sleep, because it is late at night. But at any given time, we do know where they are. We are able to even geolocate vehicles and say, in this area, you can only travel at 50 kilometers an hour. So that's a good thing about electric vehicles. It's all that technology that is in the vehicle, and all we need to do is to connect to the vehicle, and we can do so much more. We can stop vehicles remotely. We don't do that. We're not necessarily allowed to do that, but it is a functionality that we can do.
Okay, but you're not driving them. It is it's Stephen's drivers who are driving them.
Stephen's drivers are driving these vehicles. So we will provide the vehicle, the charging infrastructure. all of it, and Stephen will get his drivers there. We will train the drivers. We will be connected to their cell phones so that we tell them, driver of vehicle number 6, you are too far from home. Your next charger is further than, you won't get home in this amount of charge. Therefore, we are sending you to another charge provider's charger. So we do all of that in the back end.
What happens if Stephen's a very bad driver?
We will know. So we know harsh cornering. We know all of it. The interesting thing, I suppose, also about electric vehicles is that you're able to throttle the vehicle. So most of our delivery vehicles, we've only given them like 60% of power because initially, and I was saying we've got lots of experience in this now after 5 years, but we learned that the tires were actually getting worn off quicker because these vehicles have so much torque, and so we can throttle the vehicle so that they have less power.
That's the thing you don't know about. I mean, I've driven an electric car precisely once, and the torque is amazing.
Yeah, the torque is amazing.
Okay, so when you started, and let's just talk about that a bit. It's actually people you met first while you were studying.
Yes. So while I was studying at the University of Pretoria, I met my current business partner, one of them, Paul Plummer, and we were both doing accounting sciences at UP. We actually all did articles at Deloitte together, and that's actually where we met Wesley, our other business partner. So I've known these gentlemen for more than 20 years now.
Sure.
Yes. Yeah.
How did you go from articles to doing a business together?
So I finish articles at Deloitte. I go to the IDC just next door here. I'm there for 7 years. And then I go to Momentum to do some in corporate. But Wesley leaves Deloitte and is working with Freedom of Movement. The original Black Slope was invested there. So he's working there, kind of doing business development and running that business. And Paul is at Deloitte. He stayed at Deloitte in the consulting unit. And one day, every now and again, we would have coffee. And as we were talking, Paul and I say, one day we will start a business, but we don't quite know what it is yet at that point. And so it was in 2018 when we met again. And Wesley said, have you seen what's happening, worldwide with electric mobility? And I think that was when our eyes kind of popped and said, let's start looking into this idea and what it would look like for South Africa.
So you've got nice, you've got nice productive jobs in corporate, right?
Yes. And they like us at our jobs, hopefully.
Yes. Well, and you decide to take what's quite a big risk on what at the time was very new technology.
Correct.
In a country in which we were a little bit skeptical of new things. That must have been quite a risk. You have a family. You have, responsibilities.
No, for sure. Yes, I was having a great time as a chartered accountant, going into senior management, like really just...
Having a great time as a chartered accountant, I'm going to keep that phrase.
Said no chartered accountant ever. But we had comfortable jobs. But I think if you've got this entrepreneurship bone in you, there'll always be something that's niggling that says you should be something else. And I always had that throughout my career. I ran all sorts of other businesses on the side throughout my career. At some point, I was selling bags and shoes. At some point, I had an events company. And so there was always kind of, an interest in business. But I think what really said it was time to leave, I don't know. I think I was 35 at that time when I first thought. At 35, I think a lot of people have this, what am I going to do for the rest of my life kind of thing. And I thought, if I wait too late, I might never do this. My family is growing. My youngest child was starting grade 1 in that year. And I thought, let me try it for 5 years. Let's see how it goes. And, it's been almost 7 years and I haven't gone back. Yeah.
I think you're right about that 35 to 45. People say, am I going to die in this job?
Yes, yeah.
Let's just go back even before university because a lot of people, almost every single person who's been sitting in the chair you're in now, when I speak to them about a business they've started, there's someone in the family, not always a parent, often an aunt, often a grandfather. Those would be the two, aunts and grandfathers. Was there someone in your family?
So in my case, it was my parents, actually.
Both
it was
of
my
them?
mom and dad, yes. So the story goes before I was born, apparently.
Don't tell us the truth. Tell us the story.
So apparently, just before I was born, my dad thought, okay, he must start a retail business in a village called Amashamba back in Venda. And he was a health inspector at the time, and my mom was a nurse. And my mom tells the story about how she said she will leave her job first and go run this business, and my dad would join later. So actually, our formative years, I'm one of 5 children, were manning the till or delivering foodstuffs in the village, in the early 90s. And that's where it came from, really, that entrepreneurial family where you kind of see it firsthand what it meant. It meant you worked on Christmas Day. You never wore nice clothes like other kids at that time because that was the busiest time. But it taught us something about work and building something.
There's a sense of a family hustling together.
Correct, yeah.
And your memories of growing up in a village like that, then coming to the sort of big smoke in Johannesburg, it's a transition. I mean, I don't know where it happened. Was it after school? Was it before that?
It was before that. It was during high school. So I was in boarding school, and I was in boarding school in Hammanskraal at a school called Prestige College. And kind of 95, 96, we are in Makado in Luitrecht at the time.
The country's changing dramatically.
The country's changing, and my parents are like, what sort of opportunities can we position for these children who now, can have access to what they never had access to? And so they ship us all to boarding school.
Sure.
My siblings were older at the time, but we all went to boarding school. So we ended up, my sister just before me and I ended up in a boarding school in Hammanskraal. So it's a different place. It's a different language. It's mostly Setswana spoken there, and English also. And I'm 12 years old, kind of arriving there. And I think what that taught me, just being away from the cushion of home, was independence and actually social skills to I can stay with anybody, I can converse with anybody. And then after that, going to the University of Pretoria and living in Sunnyside, it doesn't get better than that. And just sort of learning to enterprise, sell what you can, and, you're on your own now, you have to study and all of that. But the foundation of growing up in the village and having kind of the best of both worlds, meaning the village and, the urban experience, I think has really built a lot of who I am today. Just, I can rough it, and I can do all of it. Yeah.
I'm always interested in people who can, I don't want to say sort of both sides, but who can move from one part of our society to another. Yeah. And it seems to me that you're one of those people. But I'm also thinking in my head, you have this family who, because of where we were at the time, the father could be a health inspector, the mother could be a nurse. Now they have a daughter who's a chartered accountant. And I don't know if they're still with us. If you phoned them and said, I'm not going to be a chartered accountant anymore, I'm going to go and play with electric cars. I mean, if I had been your father, I would probably have said, we put so much time and effort into making you a chartered accountant. Yeah. I feel a bit for your dad right now.
Exactly. So my dad passed away when I was kind of in articles, so he didn't get to hear the crazy story. But I think he would have supported it because I see so much of myself in him, having left what was a cushy job. But I remember the day I phoned my mom to say, actually, I think I'm going to resign. And she was just like, to do what exactly? And I think if you, my 82-year-old mother, if you asked her today exactly what I do, she'd just be like, okay, she rents out cars and they're silent. Like, I don't think she really understands the length and the breadth of what we do, but very supportive all the same. And I remember she said, follow your heart, but should it be that it doesn't work out, we educated you, so you've got something to fall back on.
And you decide to start a business. You've had some experience. You're a chartered accountant. You've got 2 people you know very well. You've got their own experience. You know that the world is changing. But now you made the point that electric cars, I think, 40% more expensive. The capital is on you. You have to get the capital, you have to buy the cars, and then you have to say to Woolworths or wherever they're your sort of anchor client, I suppose, and you will get the money back over time. But how on earth did you raise the capital?
It was a long story of blood, sweat, and tears. But you're very right. And add to that, it's a completely new technology. South Africa is not Silicon Valley. It's not where you don't get a lot of venture capital, abundance of that, and sort of.
Ndia Magadagela there, highlighting how innovation and purpose come together to drive meaningful change.
The best of the Money Show
on 702.
702.
You've been listening to the best bits of The Money Show, a digest of some of the best interviews from the show this week. If you'd like to hear more, you can go to our website or your podcast app and search for The Money Show. Thanks for listening. We're back with The Money Show, 6 o'clock on Monday. Have a good weekend.